You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 21st day of September, 2023. And we're in a post-FOMC world. Imagine that. Well, thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is reserved for members only and those who are taking their 1-week free trial. That is our live training room. If you've not taken your 1-week free trial, just go to mytradingiq.com. Click the link at the top of the page that says 5-day free trial, and your journey begins. Now, when you take the trial, you don't have just access to the live training room, but you actually have access to everything that a lifetime member or a passport holder has access to. True story. The live training room, the mentoring, the indicators, the platform, the strategy, the alerts, everything except one thing: the members only workshop, which happens tonight, which happens every Thursday night at 8 p.m. Eastern. So if you've been on the trial, you need to go now to eminifuturestrading.com. Click the link, become a lifetime member with no recurring fees, no upsells, and no nonsense, so that you too will get an invitation and you too will be in the members only workshop tonight. It's a pretty simple process, a couple mouse clicks. Now, the live training room is from actually 9:15 a.m. to 11:30 a.m. Eastern. Then we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is different from the morning broadcast because this broadcast is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. Best way, just go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. What will happen is, going forward, every trading day, you'll get an email about an hour before this broadcast starts. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform where you have access to the question box so you can ask questions and participate in the discussion. Now, there will be days, of course, where you're out of the office, away from the desktop, but you still would like to join the broadcast live. And there'll be days when you're just busy and can't join live, wish you could. Well, we have a solution. It's called our YouTube channel. youtube.com/CFRN youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,300 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. So with a word of prayer in our daily devotional, as we do every day, our topic for the next few days, visioneering. Our scripture today is Ephesians 2:10, and I'll share it with you from the Message translation. Now God has us where He wants us, with all the time in this world and the next, to shower grace and kindness upon us in Christ Jesus. Saving is all His idea and all His work. All we do is trust Him enough to let Him do it. God's gift from start to finish. We don't play the major role. If we did, we'd probably go around bragging that we'd done the whole thing. No, we neither make nor save ourselves. God does both the making and the saving. He creates each of us by Christ Jesus to join Him in the work He does. The good work He has gotten ready for us to do. Work we had better be doing. Again, that's Ephesians 2:10 from the Message translation. So, what were you made for? I'm going to begin this 7-day devotional with a fundamental truth. You were created with God's purpose in mind. And until you discover His purpose for you and follow through on it, there will always be a hole in your soul. As Ephesians 2:10 says, you are God's workmanship. Don't let this important reality slip by. Say it out loud. I am God's workmanship. Do you know what that means? It means you are the product of God's vision. God has decided what you could be and should be. And through Christ, He has brought about and continues to bring about changes in you in accordance with His picture of what you could and should be. But His vision for you is not complete simply because God has the vision. It has to be made into a reality. So you have a crucial part in it. As Paul says, you have been crafted to do good works. Particular works God has in mind for you are important and are different from the ones He has in mind for me or anyone else. Honestly, I can't get over the fact that the God of the universe has something in mind for me to do. After all, doesn't He have other things to think about? But the Apostle Paul assures us God has prepared something specific for each one of us to do. This means you and I have no right to live visionless lives. If God has a vision for what we are to do with our allotment of years, we better get in on it, don't you think? What a tragedy it would be to miss it. God's vision for you is what you were made for. And more than that, His individual vision for your life is a small part of a grand plan for the universe that He envisioned and put in motion long before you or I came on the scene. I'm not exaggerating one bit when I say that your vision came from eternity past, and fulfilling it will have effects lasting into eternity future. Think about what it means to be God's workmanship and begin trying to discern the purpose God has built into you. Join me in a word of prayer. Heavenly Father, we come before you today with hearts full of gratitude for the beautiful truth found in Ephesians 2:10. Your word reminds us that we are your workmanship, created in Christ Jesus for good works that you have prepared in advance for us to walk in. Lord, we thank you for the incredible privilege of being your handiwork. We are humbled by the thought that you, the creator of the universe, have shaped and molded us according to your divine plan and purpose. Help us to fully embrace our identity in Christ. May we understand that our worth and significance are not based on our own efforts or the world's standards, but on the fact that we are your beloved children, created with purpose. We acknowledge that you have designed specific good works for each one of us. Open our eyes and hearts to recognize and fulfill these works in our daily lives. Show us the opportunities to love, serve, and make a positive impact on those around us. Lord, in moments of doubt or insecurity, remind us of the truth that we are your handcrafted masterpiece. Let this truth empower us to step boldly into the good works you have ordained for us, knowing that you equip us for every task. May our lives be a living testimony to your grace and transformative power. As we walk in the good works you've prepared for us, may we bring glory to your name and draw others closer to you. It's in Jesus' name we believe and pray. And everybody said, Amen. Well, happy Thursday. Again, members workshop tonight, 9 p.m. Eastern, 8 p.m. Eastern. It was 9 p.m. for a number of years. Then we switched it up. All right, let's start with the cash markets or the indices. The Dow is down 205 points. The NASDAQ is down 176. which is over 1.25%. S&P 500 is down 49, which is well over 1%. And the Russell 2000 is down 20 points, well over 1%. In the commodity basket, crude oil up 34 cents, trading $90 last. Gold down $29.70, which is a drop of 1.5%. Silver down 27 cents, trading $23.56 last. That's a drop of just over 1%. In the Asian markets at the close, Nikkei down 452 points, almost 1.5%. Shanghai down 23 points. The Hang Seng down 230, which is a little over 1.25%. And in the European markets at the close, FTSE down 53, the DAX down 209, the CAC down 116. Now for the DAX, that's a drop of almost 1.5%. And with the CAC, that's a drop of over 1.5%. So that gave us a red day in Asia. It was a red day for the UK. And it's a red radio Thursday here in the US of A. With that, we'll go to Logic 247. That's our 24/7 around the clock E-mini alert service. But it's not just the E-minis, it's also crude, gold, silver, euro, a little bit of everything. We're in week 267. Over the last 267 weeks, we've issued over 15,000 individual handcrafted alerts. This recap is valid through 7 a.m. Eastern this morning, and Valerie will update it again this afternoon and this evening. So far this week, we've issued a total of 29 alerts, one never triggered, still waiting on one. That gives us 27 actionable alerts, of which 2, or 7%, would have been stopped out based on not risking more than $300 per contract per trade, less when possible. Based on market structure and a simple process we teach all of our passport holders in their unlimited one-on-one mentoring sessions. Now, you never risk more than the potential profit in a trade. If it's a trade you find on your own, which hopefully that is your goal, I want you to become self-sufficient. Hopefully you want to become self-sufficient. You can't really call yourself a trader if you spend the rest of your life waiting for somebody to tell you when to get in and when to get out. Our purpose is to teach you to be able to look at the chart, see the windows of opportunity, and at a glance, see where the opportunity is. And then be prepared to take action when price reaches that area. So whether it's an alert that you're trading or a trade you found on your own, you never risk more than the potential profit in the trade, the obvious potential profit. Now, an alert could have a potential profit of $1,000, $2,000, but the maximum you want to risk is $300 per contract traded. There will be some alerts that have less than $300 potential profit. They're rare, but they happen. And so whatever that potential profit is, that is the maximum you should risk. And if you know you're going to get out at the initial target, which is designed to help you get your goal for the day, then that's the maximum you should risk. We had a question the other day from one of our brand new passport holders. It says, gee, it seems a little risky to risk $300 to make $100. That's not what I'm saying. What I'm saying is you don't risk more than the potential profit in the trade. Now, if a trade has $2,000 of potential profit from the entry to the final trade to target, great. You still don't risk more than $300 per contract per trade based on market structure. No matter how much potential profit is in the trade, if you know you're going to get out at the initial target, that's $100 per contract traded, and that's all you should risk. The only exception is the NQ. Because of its volatility, the initial target is worth $200 per contract traded. Over the last 267 weeks, we've averaged 20% or less of the alerts being stopped out based on the risk profile I just explained. Yesterday, we were still sitting at 0% on the week, but we knew that would change by end of the week, and we're at 7%, plus we've put out more alerts today, and we still have all of tomorrow. Now, the logic alerts, again, are based on current price action. There's time built into each alert. For you to get the alert, go study the 30-minute chart, see the window of opportunity that the alert represents. Then when price reaches the entry point, use what you learn in the live training room every day to execute the trade. It's that simple. Okay? Now, a logic alert could come out at 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. But you should be using the alerts to teach yourself how to find the windows of opportunity. That breaks the chains, that sets you free. You can trade anything, anywhere, at any time, wherever you happen to be, once you learn how to trade. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's a cycle that's been in existence since the inception of the markets, and it will remain in existence as long as the markets continue to exist, because that's how markets work, plain and simple. Now, along with the logic 247 alerts, we still have our concierge trade alerts, which are a little bit different in a couple ways. Number one, they don't come out around the clock. Posted as a static report shortly after the Globex open. Globex opened last night at the Thursday session, which we're in today, began last night, Wednesday night at 6 p.m. Eastern. So the CTAs came out 10 minutes after the open. Now, what do you do with the report once it comes out? Number one, only concern yourself with markets that you actually trade. Use the ES as an example. When this report is published, go to your 30-minute chart, markets you trade, and make note of where price is at the time the report comes out. It will always be between these two numbers, or these two, or these two. You get the idea. Then draw a line in the sand at the long target, line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it is attempting to reach the long target. Price gets below the 30-minute BBC, it's attempting to reach the short target. It's pretty simple. Now, on the logic alerts, I've already looked left for you to spot potential obstacles, previous swing highs and swing lows that can become current support and resistance. With the CTAs, you get to look left yourself. It's part of the process of learning how to spot these windows of opportunity without help from anyone else. You look left, you see a previous swing high, you know that that is potential resistance on the way to the long target, or a previous swing low is potential support on the way to the short target. You also have to learn how price behaves at a weekly trading zone. Price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night, 6 p.m. Eastern, until they close Friday afternoon at 5 p.m. Eastern, price is trying to get to a weekly zone. If price is above the 30-minute BBC, it's trying to get to the zone above. If price is below the 30-minute BBC, it's trying to get to the zone below. It's really simple. You just have to resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. The weekly zones, once you understand how to use them properly, will become one of the most important tools in your trading toolbox. And as a lifetime member, you'll have access to the zones Monday morning, 6:15 a.m. Eastern, unless Monday's a market holiday. Then you'll have them Tuesday at 6:15 a.m. Eastern. This gives our members time to get them on their charts before Wall Street even wakes up for the week. All alerts that go out on Sunday night are based on the previous week zones. We've published the zone since December 14th, 2009. That's a lot of years. It's a lot of data. Only one of three things happens at a weekly zone. 70% of the time, it's consolidation. 20% of the time, it's rejection. 10% of the time, it's the slice. That's when price slices through a zone like it's not even there. When that happens, and that move runs out of steam, price will typically retrace back to the zone it sliced through, and then continue in the direction of the slice. Does that happen 100% of the time? No. There are very few absolutes in the world of trading. Things like important prices, important areas are almost always tested. That's an absolute. Price always reverts to the mean. That's an absolute. Okay? You got to learn to separate fact from fiction. So let's go look at our daily chart. Now, we've been talking about this for quite a while. Left shoulder, head, right shoulder, it looked a number of times as if the pattern might not complete. And we still haven't really broken the neckline yet. I've deemed the 38% fib retracement as the neckline, and we're sitting right on top of it. Now, what's really interesting in this situation is we know that when we have a bullish cross that leads to an extended move, first time price revisits that area will almost always be good support. On a head and shoulders pattern, a measured move is you measure the top of the head to the neckline. And then once the neckline gets broken, Technical Analysis 101 tells you this is how far price should drop. The interesting part is that it's right at this bullish cross that ultimately led to this huge move to the upside. Now, can we trade beyond the measured move? Of course. But the thing you want to concern yourself with right now are the obstacles that are in the path. Yesterday, we talked about we had to overcome this obstacle, and we talked about having to overcome this obstacle, 43.97.75, which we've done. We've actually, we came within roughly a point or so of actually touching. But I got a feeling we're going to touch it. What's important is if it breaks. Break the neckline, and it's on like Donkey Kong. Okay, that's where we would look for that measured move and the move down to the previous bullish cross. But we have obstacles on the way. If we break the 38% fib, now typically we would get a nice bounce here. Markets are heavy. Break through the 38, break the neckline, start the measured move, well, right here at this low, 43.50, potential support. Then you've got the 50% fib retracement. Then you've got this little double bottom right here at 42.60. Then you've got this area here, 42.20. Then you have the 62% fib retracement. And you have assorted lows here before price can actually make it all the way down to the area we just discussed. So I said yesterday, I don't expect this to happen overnight, but the markets reacted pretty negatively to the Fed yesterday, and this is the result. A large portion of the move did actually happen over the course of 2 days. Where we close today will be incredibly important. Do we close above that 38% fib retracement and the neckline, or do we close below it? And if we were to close below this low, then it becomes a really high probability that we're going to drop roughly 48 points down to the 50% fib retracement, which on the daily chart almost always gives a great bounce. Institutional traders look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? It's all about account size. Their accounts are denominated in hundreds of millions and billions and even trillions of dollars. When they trade, price moves. When institutional traders trade, that does not move price. So our strategy and indicators are not designed to outsmart the institutions with all of their infinite resources, or to beat the market, whatever that means, but to give us a granular view of what the market is doing and why. What's its goal? What's it trying to do? Remember, no matter what market or time frame you look at, price flow is the same. And it's always trying to do one of two things: break the previous swing high or the previous swing low. So being able to monitor multiple time frames and put all of that in context helps you understand which way the wind is blowing. And we definitely have a southerly breeze today, don't we? And we had that yesterday as well, by the time the day was finished. So all of the alerts, which again are designed to help you learn to spot windows of opportunity in the market without having someone else tell you when to get in and when to get out. The vertical line separates today, Thursday, from yesterday, Wednesday. Just keep in mind that today, Thursday, started last night at 6 p.m. Eastern. This was the closing candle of yesterday, the opening candle of Thursday, even though it was still Wednesday night. Below the BBC, we got red and falling, and price made its way right down to the target, bounced, came back to the target, spiked it, bounced. When the market finds support, it'll go look for resistance over and over, get in again. So we come down through the target again, consolidate a little bit, and we're still dropping. Got one more weekly trading zone below us, down here at 43.58. Down. Here's where we opened last night, and we made that same drop like we did on the ES to the short target. Bounced, hit it again, bounced, hit it again, pulled up just shy of the BBC, put in a nice little doji there. Now we go through the target and continue all the way down to the weekly trading zone. Here, we're consolidating sideways. This is wide-ranging consolidation. Remember, 70% of the time, consolidation is what you'll see at a weekly zone. So price now needs to take out these two lows. There's a window of opportunity right there. 34,490 to 34,460, about 30 points. On the Russell, here's where we opened, dropped right to the short target, consolidated along the target for hours, then got below blue and climbing, which turned it to red and falling, and that's what we've been doing, falling. Now we've got one more zone below us on the Russell. Okay, so once we take out these lows, should we take out those lows, then we have a nice window of opportunity down here from about 17.99 to 17.96. 3 points, $50 a point, $150 per contract traded. Here's where we opened the NQ, and here's where we hit the weekly. We hit the target, and then we hit the weekly zone. And what do? We consolidated for hours till price dropped below blue and climbing, turning it into red and falling. And we had a perfect stack down. Price, step line, red and falling, BBC. Price always reverts to the mean. Step line has crossed. we've had several attempts to pull back to the BBC. There's a lot of selling pressure there. Red and falling has gotten directly below price, so now it becomes potential support. In fact, in this past candle, it was support. So what are we looking for now? Well, if we overcome the step line and this high, that will put us at the BBC. Price always reverts to the mean. In our case, the mean is green and it's called the BBC, just stands for bull bear cross. When price crosses above it, we're bullish. We anticipate higher prices. When price crosses below it, as it did yesterday, around 12 noon Eastern, we anticipate lower prices. Which is exactly what we got. Crude, we're now in the X contract. We opened last night just above the weekly zone, which is 89.15/20. Then we drop below the zone, drop to the target, consolidate. We pull back up to that same zone that was support, and it becomes resistance. The next 30-minute candle, we managed to get above it, and then we pull back to the zone we sliced through, and we continue all the way up to the target and just shy of the zone overhead there, 91.05, and the high here was 90.98, so we missed it by 7 ticks. Price always reverts to the mean. Pull back holds more often than not. And as you can see, we spiked the zone, touched the BBC. Now we've got blue and climbing rolling over. And so if price comes back down to the BBC, this is probably going to turn to red and falling. Then you should be looking at a window of opportunity down here. Keeping in mind that the bullish cross that led to this extended move, first time price revisits that area, it will most likely be good support, especially because you also have a weekly zone there, 89.15/89.20. So 89.40, 89.30, go for the day. Just got to be patient, wait for price to get there. Gold. Here's where we opened last night, right at the weekly zone, and we dropped to the target and to the zone. When we drop to a zone, we expect support. When the market finds support, it will go look for resistance, which it found at the BBC. Remember, the pullback holds more often than not, whether it's pulling from above or pulling up from below. And so then we continue down, find support here. If we go look left, we can figure out exactly why. Price then retraces to the BBC. Again, the pullback holds. Now we have a situation where red and falling has gotten directly below price. So price is literally trapped. Resistance overhead, support below. The trade here would be for price to break these lows. And then you've got this area down here. Silver, here's where the market opened. Dropped to the target, short target. Came down to the zone, consolidated. Pulled back to the BBC, hit the short target again. Dropped, but it ran into a previous swing low, which held it up as support. And we got back above the BBC, red and falling, turned to blue and climbing. Now we're headed back to the long target for the second time. Need to take out this high right here. And then your window of opportunities right there. Only takes 2 pennies in silver to reach your goal for the day. And the euro. Here's where we open. Price dropped to the short target. Dropped to the zone. Almost made it to the next zone below. Go back to the BBC. And we've just kind of been sideways, although we have gone from zone to zone. And because we're above the BBC and have blue and climbing, we're now attempting to reach zone overhead once again. All right, looks like Michael has made it. So,
yes, I have.
there you go.
Thank you. I had one more thing to get ready right over here, and then I'll bring everything over.
One more time. Okay, I'll show you guys after Michael's done.
Here it is.
Huh?
Okay. Never mind. I thought you were going to do something else really quick because
well,
you thought I was going to do something else really quick.
Yeah, no, you go ahead.
Right.
I'll do it after you're done.
Okay. I just want to get the upcoming stream.
I just want to remind everyone we're sitting right on top of that neckline. What we've been waiting for on the daily chart for a long time. So this is going to be make or break day, most likely. Not today, tomorrow. Okay, looks good.
All right, good. Okay, I did all that. Everything looks good. Here we go. All right, good afternoon, everyone. Today is Thursday. It's Thursday. Partners meeting tonight, 8 p.m., guys. It's Thursday, the 21st day of September 2023. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com. Click on this right here. Right, that's going to bring you to this page. Fill out this form. When you do fill it out, if you have a TradingView username or ID, give us that. If you have an NinjaTrader machine ID, give us that. If you have both, give us both. I'll set you up with both of them. But do that so we can get your indicator set up for you right away. Okay. There were a couple of guys in the last 2 days, as a matter of fact, 2 people in the last 2 days actually gave me both of those, and I was able to set them up on both for their trial. So if that is you, you can get both. Yeah, if you're not taking the free trial, click on that, do all that. Click on trading platforms and give us all the information we need to set you up for the trading platforms. Click on trade rules and you will see in here all the rules for the trade setups. Today we went over the DOM. So this part here about learn how to read the DOM to find potential the price is searching for. I think we had a pretty good thing on the DOM. I actually took a screenshot this morning that I never ended up using. I took a screenshot while I was in a trade. And this is what it looked like while I was in the trade. And I didn't end up using it this morning, but I'll see if I can save that for tomorrow. I'll use it tomorrow. All right, so the spreadsheet now. Okay. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 21st day of September 2023. We made 56 ticks on the MQ. 1 on the Russell, we lost 10 on crude, and we made 4 on the ES. That put us at plus 235 in the morning session. Today it took 17 minutes and 4 trades to get to $1,170, and we took a total of 26 trades this morning. So on the month now, we're at $3,877. That's over 13 trading days, averaging $298 per contract per 2-hour trading day. We've got our goal on 175 out of 179 days on the year, and that puts us $78,802. We're averaging $450 per contract per 2-hour trading day. Okay. If you were to quit trading when you get your goal for the day and you were to add 1 contract per month, so far this year you would have only had to work 55.5 hours and you would have averaged $2,293 per hour. Again, this thing that I'm doing starting 15 minutes early is killing those numbers, because today, if you look at all these things here, if you subtract 15 from all those that are over 15, you will see that like today was 17 minutes, and I actually had a stop out that I had in the first 15 minutes that I had to make up, and then it took 2 minutes from the open to make up for that and to get the goal for the day. Oh, it is what it is. Yeah, so that's where we are now. All right. So if we look at everything that we did today, I believe we traded all the markets today. We did trade all these markets today. We'll start out with the crude oil. Now, crude, we were back and forth on. back here, all the way back to the beginning. This is where we started out with crude, with a stop out right here. That's what we got in the pre-market, was a stop out on crude. We ended up getting it back right here. So we had a -10, and then we got back to break even right there, but we'd already gotten the goal for the day by that time. That put us up a little more. Then we had a break even trade right here, and we stopped out again here. That put us back down to -10 on the crude. We didn't have another trade, and we started our training, and I was going through this in the training, saying how TradingView does all this stuff for you. You don't have to draw all these trend lines because TradingView lets you know right over here, you're in a trade zone. You don't want to be trading right here. Right? All this stuff would say you want to wait until you break out of that triangle, and then once you break out of the triangle, you want to wait until you have a valid trade set up, which you didn't get until it broke all the way out, all the way over here is your first valid trade setup. But the TradingView indicators, you know, you're in a no trade zone, no trade zone, no trade until over here when you actually do get the trade. You don't have to draw all these trend lines. Anyway, so we had one more break even trade on the crude oil this morning, right in here. Right, and we get into the break, and it was a beautiful trade right here, green arrow trade right there, and this one over here followed up, and that would have been a break-even trade. If you took any of these black arrow trades here, this would have been a nice win, and this one right here would have been a break-even. If you took this one, you couldn't have taken that one. Turned around and gave you this nice green arrow right here, and this one right here looks like it would have been a break-even trade. It would have just about stopped you out right here, and then it was just enough to give you a break-even trade, maybe a little profit if you stuck it out. Trailed your stop close. But that was crude oil today. We ended up with -10 on crude. Okay, and the Russell today, we didn't have too many trades on the Russell. We did finally trade the ES again today. I'll get to that in just a minute. On the Russell, we started out right here, and we had one tick profit on that first trade. I missed that one, and I got one tick on that one. I had a break even on this one, a break even on that one. Again, I was drawing the stuff in here to show that at this point, I was showing that the indicators tell you that you can take a trade in here because we're in a channel, we're not in a triangle. And so you got the green arrow here saying it's okay to take the trade, and you could have taken that trade and gotten some profit on it. I didn't. That was during the training part of it. I didn't get any of that or any of these all through here. Right. I guess I didn't do any more on the Russell today. There was a green arrow here that would give me a break even. If you took that, you can't take that, but you could have taken this and gotten a little more than break even, and then I wouldn't have done anything else. And that was the Russell today. Okay. On the ES now. Let's go all the way back here on the ES. Let me click in here. I do have to work on those weekly trading zones today. No, I promise. I didn't promise, but I said I'm going to really try to get the weekly trading zone thing done for you guys. I created a thing. See, it puts the zones on just like that. There's something extra that you're going to have to do when you put the zones on, though. Once I get this thing done, you're going to have to right click in here and do scale price chart only. All right, that will put the zones on where they're supposed to be, because right now there's zones here, but there's also zones up here. Okay. So that you don't end up seeing those zones is by right clicking and doing scale price chart only. You can still use all these other things. See, now when you do scale price chart only, then you only see what's there. Okay, oops, I went all the way to the end on that. Didn't mean to do that, but the ES is going to be pretty quick to go through. So hopefully I'm going to have that done today. I don't know, we'll see. For those of you guys who are partners, that will make things easier if you put the weekly trading zones onto here. And it'll be similar to all the other ones. We just have to paste the list of zones right in there, set the count number. All right, that's the way I'm trying to build it anyway. All right, so in here on the ES, we didn't have any trades in there. Now we hadn't traded the ES in like 4 or 5 days. We didn't get any trades until right here. We ended up with a break even on this trade right here. I know I should have probably locked in a little profit on that, but we finally did. We took another break even trade over here, and I was thinking when I took that trade, I should probably lock something in. So I mean, now I've actually had 2 trades this week. At this point, I had 2 trades this week on the ES, and it's Thursday. When I got this one, I was looking for it to get down to the swing low right here. That's what I really was looking for it to do. It should have gotten down to the swing low. That's also the low of the day. but it didn't do it. That would have been 14 ticks in profit from where I was. So I locked in 4. And I said I'm going to get 4 or 14, and it came back up right before I shut it off for the morning session, and it gave me 4 ticks in profit right there. So that was what we did on the ES. During the break, there was nothing that you wanted to do there on the ES. So yeah, so you have that. All right. On the NQ now, let's see. On the NQ, we had a bunch of trades. Most of the trades are on the NQ, as they usually are. And then we make more money on the NQ than any other one because the NQ is the most volatile, and we have more trade opportunities. We had more trades on the NQ, double the number of trades on the NQ. Well, all the other ones put together, the NQ had more than double. And the NQ is where we got our goal for the day. I missed some nice trades during the explanation today. So I picked up this trade right here in the pre-market. After I stopped out on crude, I picked up this one, and that was not enough to get the goal for the day. Right at that point, I was at +8 on the NQ, and I was -10 on the crude. Then I picked up another 8 ticks here to get me at 16 on the NQ, still -10 on the crude. And then I grabbed this one for 30 ticks. So that put me at +46 on the NQ. Still -10 on the crude at that point, but I had a crude trade going on. Where I got back to break even on the crude, but right here I had 46 on the NQ with -10 on the crude. That put me, I think, at +130 overall, and that's where we got the goal for the day. Okay, I did make a mistake on that crude trade when I first put it on at the very beginning, and I accidentally clicked it twice, so I had twice as many contracts on it than I wanted to. But per contract, this is where we got the goal for the day. So after this one here, we were at 46. Then somewhere in here, I took another trade and I stopped out because I went from 46 down to 26. Then I went from 26 to 28 right here, I think. I don't know where I stopped out, but I did stop out somewhere. It might have been right here. But I went from 26 to 28, and I stopped out again somewhere. Where is my stop out? I had a break even. There's a stop out. I had a break even there, then I stopped out here, because I went from 28 down to 8, and then I had a 30 there to get me to 38. Okay, my stop outs might be the wrong one. Then I had to stop out here. Okay, well, the other stop out that I got that I didn't have one on, I guess this might be it right here. But then I went from 38 to 68, and then I went from 68, we had to break even here, I went from 68 to 72, so I had a small win somewhere. This is where the training started. So I had a small win somewhere. I had a break even right there, a break even right there. A stop out here. Went from 68 to 72, so I mustn't put in the one where we got 4 ticks. Went from 68 to 72. We had a stop out here. We went from 72 down to 52. And then I had, okay, and then I had a win here. We went from 52 to 56, a break even there, and then I didn't put this in. Whatever I got on that, I did not put in. And that was it. Okay, so for the morning, we ended up with plus 56 on the NQ. I was really hoping we could get over 100. Okay, I was really hoping we were going to get over 100 on that. 100 ticks, but I didn't end up with it during the break. If I had taken all these trades here during the break, it would have done just fine. The green arrows in here, really nice trades. And that would have been a break even. That would have been a profitable trade. That would have been a stop out. And that would still be going right now in profit. Right, and that was the NQ for us. I just reached 101. Okay, so I got to jump into the live stream right now. But if you have not taken a free trial with us, go here to mytradingiq.com, right here to mytradingiq.com homepage, and click on this. That will give you the free trial. All right, so give me just a second. I got to start that live stream. Here it is over here. Let me hit refresh on this, and let me stop that from popping up. And do this, and this, and this, and this, and that. All right, so there you go. I was just saying, if you have not taken a free trial with us and you want to, go here to mytrading.com, click on this. That will give you the free trial. Right now, the NQ is the only thing we have a trade setting up on, I think. Yeah, the NQ is the only thing we have a trade setting up on. I set up here, getting narrow for the short right in there. I was going over what we had done today in the morning session. And just to keep everybody in the live stream up to date, in the morning session, we did get our goal today for the day this morning after, I think, 17 minutes and 4 trades. We're $1,130, $1,130 total, I think. I'd have to go back and look. We'll look right here. It took 17 minutes and 4 trades to get to $170. Okay. We took a total of 26 trades this morning. That's where we got the goal for the day this morning. If you're in here on the live stream right now, we also do a live stream in the morning starting at 9:15 a.m. All right. So if you got this trade over here, it went about 15 ticks into profit. You put your stop and break even after 8 ticks in profit on it. I did not have time to put that trade on and do anything with it. There was a here that also worked out really well. It was enough to get it and put in a lower swing. You see right now, it looks like things are G-direction on us. This, I think I accidentally moved that when I was going over stuff a few minutes ago. So I'm just going to remove it. It's not doing that. We're in a no trade zone here, here, here. Right, the crude oil is the only thing that's not in a no trade zone now. And if we look at the crude oil on the bigger picture, let's see what that is trying to get. Here is the crude. Okay, so the crude is right on top of the ribbon right now on the 30-minute. And if we look at this, it's going to be kind of tough where it is right now to go any further down. They say it should get down here. It should get down to 89.60 is where it should go right now. Where are we? 70. So it's got another 10 ticks in it. I'll draw that in for you right now. This is where it should go down to. I don't know if it's going to pull back before it does. One of the things that we were going over today in the lesson plan was reading the DOM. So reading this DOM, it's kind of a mixed bag. It's not really if you're one side or the other. The stuff that's jumping out at me in the DOM says it's going to pull back a little bit right here, and then it is going to push down 63, 68, and 74 would jump at me on the downside. Just pull back up here to like 84 right now. Looks like it's going to try to pull back. Okay, that's just reading the DOM, and that was from this morning's lesson plan. Right? I don't know if it's going to do this, but that's what it looks like it's going to do. Now, one of the things from the lesson plan this morning was obviously you use the charts to get into a trade. Right? But once you're in a trade, you can use, using the DOM is one of the skills that we teach you to manage a trade once you get into it. Okay. And it's a really good skill to have. To know what to expect out of a trade when you get into a trade. Right? Anybody can put a trade, know what to do with the trade once you got it on. That's where the rubber meets the road. Right, so all these markets right are going sideways. If you are in the live stream and you want to see anything other than futures, you got to type in a symbol for me. If you want to see anything other than futures, just type in a symbol you want me to put up, and I will do it for you. There is one thing I do want to check. I just got a message from last week. It said to check the value of Boeing today. So you got looking at this a little bit. Somebody asked about it last week, and let's get it on the bigger picture. Last week, when they asked about it, we were in a daily and then on a weekly, I think, right? And we said at the time, right here, we were expecting back up and get to the ribbon. It never did pull back up and get to the ribbon. It kept going down. So this kind of wrecked the head shoulder pattern, right? The question last week was, is it a good place to short? And I was saying, if you're already a short, want to trail your stop and lock in the profit. And if you're not short, I wouldn't short it at that point. I would wait for it to pull back. It's if I could ever pull back. This is 7 days ago. It was right down here 7 days ago. And I was thinking it was going to back up and test the ribbon because this is the neckline that it needed to break. It looks like it's gotten down here to this level. If you call this whole thing right here, right in here, Let's just use this here, and then if we about that whole section right there, because that right now, I wouldn't short it right here, but it is breaking the neckline to the downside. Looks like to be the established neckline. This would be the shoulder. It'd be developing the shoulder. If it doesn't develop that shoulder, then you don't have a hidden shoulder pattern. You have a holder pattern. You have a flag. So it is what it is. That was Boeing. Okay, it never got the pullback that we were expecting. So we got up to 94 here. I mean 84. I'm sorry, over here we got up to 84, and this is what it should push down to. We don't have a trade set up for it here on crude oil right now. Okay, there's no trade set up for that right now. But we'll see if we end up with one. Right, this we're going to put back to a set range. While we were talking, the NQ gave us this green arrow right here, and it's starting to put up a higher swing. So now we might get some traction on the long side of this. Let's look at that in the bigger picture. Okay, look at that in the bigger picture. The NQ. All right, so this range that I had identified this morning, you see it stayed in it during the break. It stayed right in that range. It went down to the bottom of the range, and now it's bouncing right back up. So the top of the range is up here, right in the middle of the ribbon. That's what it's shooting for, this 15,000 number that it kept tapping and getting rejected at. It's going up for that one right now. Again, I would bet. So you just gotta wait and trade what's in front of you. Okay. If anybody has any questions, all you need to do is type them in. Any questions at all, just type them in, and I'll be happy to answer them. If you want to see any other symbols, just type that in. Okay. So make sure this is set to the right thing. It is, because we're in a big no trade zone right here. I think here on the ES. Hello, Waziji. Well, Waziji. If you want to see anything other than futures, just type in the symbol, and I'll take a look at whatever you want to see. Okay. What we have works on everything. You just have to change a couple of settings to adjust the node trade zones. You adjust the sensitivity, the different dollar value of the security. Okay. The idea behind the node trade zone, this blue part back here, it helps you identify when you're going into chop when there's a direction change. You don't want to trade when there's a direction change. You want to trade after the direction change. And when you have a whole bunch of chop like this one right here on the ES and over here on the Russell, you don't want to trade when it's like that. Okay, that's why we have that. Okay. About TRB USDT. That is the symbol. Okay, let's type in that symbol and see what we come up with. Here. TRB USD. This one right here. Yeah, it's on Coinbase right here. USBDT. Which one of these do you want to see? This one on Binance, maybe? Yeah, we have TRB USDT right here. Exactly what he typed in is right there, but we have this up here too against the US dollar. So it looks like it's got this perpetual contract or whatever, this one. Yeah, Binance, he said. Yep. He said Binance. Let's look at that. See, now this is not going to work with the no trade zone the way it is. You got to change the sensitivity on this. It's way too conservative, so we'll do 0.01. See how that does. Okay, that's much better. Okay, so in here right now, well, this is on a 7 range. You probably don't want to trade this on a 7 range. So it is only 30 bucks. You could trade it on a 7 range, but let's trade it on something else. Make it a 25 range. So each bar is a quarter. Okay. No trade zones are still in the right place here, so that's okay. You had a push right here. What it should do is make it up here to 33.82. Now, when you talk about this, are you talking about day trading it, or are you talking about bigger picture? You know, because I would look at a much different time frame if you're talking about a bigger picture. If you're just talking about day trading it right now, it had a long from back here and it should push up to here to 33.78. But if you're talking about investing or swing trading, then we're going to make this like hourly or daily or weekly. Okay. There's no trade over here on the crude. It hit the pullback number. It's going to push down to the target number down there without giving us a trade setup, sadly. Okay, for the day trade, this is what it should do. You had a long trade from right back here at 33.07, and it should push up to 33.79. Okay, that's looking at this with each one of these as a quarter right now. Okay, each one of those is 25. If you want to look at it, it's a little bigger than that. It's probably going to say the same thing if I look at it on, make each one of those 50. Right. It's a different story here. If each one of those is 50, you pull back up and testing the ribbon right now, and it's looking like it's going to push down to here. So the bigger picture, if you're looking at the bigger picture right now, it looks like this, right? No matter what time frame we look at, the bigger picture is going to look like you're in a downtrend right here. Okay, so if we go back to the 25, let's just look at the bigger picture on the 25. Okay, it's right here, lower highs, lower lows. You're in actually a blue bull here, so it's going to break out of this to really give you a breakout one way or the other, but it's looking like it's going to break out. It's pretty much at the top right here, and see what a blue bull is. Now, you could argue that you have a trend line going like this, in which case you'd be in a triangle, and your breakout point would be even closer. It'd be down here instead of up here. But when you look at the bigger picture like this, you're clearly in a downtrend. And so it's at a point right now that it should drop from. Okay, so I would say in the bigger picture right now, on a 50, if it gets up above 33.77, then you're probably going to get a direction change right here. It's going to get really choppy and sideways. If it fails here, then I would look for it to drop down to 31.70, 31.80 probably. But from the smaller picture, if you go down to the 25, I don't know what level of risk you want to have. That's the difference between what you're looking at. From the smaller picture, it looks like it's going to get up to the prior swing high. You're going to get a wick that goes up to this level right here at 33.80. The difference between the time frame and ranges, every bar in this one right now, because this is a 25, every bar in this is 25 high, 25 cents high. Okay, that's the difference. So the risk is the difference. You know, in here you would have been long from back here. All right, so it's too late to get in this on the long side, but you would have been long from back here at 33.07, and your stop would have been down about right here. Right, about 25 range, your stop would be about 40 ticks. So from 33.07, your stop would have been down here at 67. Okay, your stop would have been right here. Because gone this far into profit, your stop would be a break even. You'd have no risk on the trade. Okay, that's what you would have here with the 25 range. Okay, if you were doing it on a larger time frame, on a 50 range right now, your entry point would have been right here on a 50, and your stop would have been 75 cents. So from 33.30, you would have been looking at, stop would be right here. Okay, at 34.05. That's where your stop would have been, right? So it already went down from 33.30. It dropped all the way down to 32.82. So you would have locked in some profit and moved your stop to break even. At this point, you wouldn't be in the trade. Either one. And you'd be out of it right now. And I'd be looking for this to go down and put it in the lower swing from a 50 range. And I'd be out of the trade on either one of them at this point. But from a 25 range, you want it to get up above this level here. And even on the 50 range, if it gets up above that level, you're probably going to change directions. It'll get choppy and sideways. But but that's what I'd be looking for on a 50 range. You want to continue the trend, right? The markets are always doing the same thing. Okay, they're going down like this, and then they go up, and then they go down, and then they go up, and then they go down, and then they go up, and then they go down. Then right here, it kind of messed things up because it went up too far. It broke that level, but then it corrected, and it whipped all the way back down. And so right now, you're continuing the trend. All right, what it should do right now is continue the trend down. That's what it should do. Okay, but right here with this right here, kind of messed up the nice downtrend that you had. And right here, it barely put in a lower swing, so you could tell right here that the trend was getting weak. And right there, it got a little strong on the upside, but not strong enough. So there's a lot of people wanting to sell this right now. Okay. Does that make sense to you? You have to watch this. You can watch this again in the recording later, right? Because all these things that are on TradingView, you can go back and watch them later. But that's what it looks like to me on this chart. Okay, if we go here to the 25 range, then I'd already given you this information right here. Now you could argue that you have this information also. Okay, in which case this is going up above this level. I said I was looking from the 25 range. I was looking for it to get up to this level just because that's what it should do. The trend right now in this picture right here, the reason why we have the indicators is so you don't have to actually draw these trend lines anymore. But this is what the indicators are telling you right now. This is what your trend is. Okay. This stuff from the bigger picture, you don't have to have that if you just go with what the indicators are telling you. The indicators are saying, look at this right now. If this is the time frame you want to work in, then look at this. You should have been long from right here, and you should expect it to get up to here, at least up to there. Remember the stuff on the 50 range, what I was telling you, the price went down, it came up, it went down, it came up, it went down, it came up, and it got choppy in here. Then it went down and got choppy in here again. Gave you another green arrow going down, but it didn't put in the lower swing, did not continue the trend, it just got choppy. And then it exceeded the swing high right here, and it went up and it started the trend in the other side right now. So this is what you expect, right? That's what you expect. Every bar is exactly the same size, that's right. Okay. So that's why we use range bars for what we do in here. Now, when we look at the bigger picture things, like let me drop this down. And in here, while I was doing that, we missed this trade. We missed this trade. We didn't get anything on the ES, but I forgot what I was going to show you. I was going to show you something else, but I can't remember what it was. All right. So anyway, we expect this to put in a higher swing right now. All the same things that I just told you on this time frame. This is 15 range. 15 range. So everything I just told you, I expect that to happen here too. And that's what we look for on every trade that we do. Like if you look at the NQ today, let's just look at a piece of it right here where it changed directions. Okay, so we had this nice trend going down, it pulled back up, it went down, it pulled back up, it went down, just barely put in a lower swing, but it pulled back up, made up for it, put in a nice one, pulled back up, did a nice one, pulled back up. What happened right here? It didn't go all the way down. You had a trade indication for it. Now this is where the risk management comes into play. Okay, if you move your stop to break even, like you follow the rules here, you go to trade rules, risk management suggested for all platforms. Right. If you move your stop to break even at the appropriate time, in this case after 8 ticks in profit, then you would have gotten taken out break even on this trade. Right, the entry was here at 28.25 and it dropped down to 25.25, exactly 8 ticks. So you move your stop to break even, you get taken out at break even. It does not continue the trend. So what we're expecting on this one, I show you this, right? Down, up, down, up, down, up, down, up. So we're expecting it to get down below this level and not get up above that level. So we've got right here, we've got the entry right here, did not continue the trend. So we don't take any more trades in that direction. Okay, no more trades in that direction. And so then it chops around a little bit, and then it finally exceeds that level right here. It chops around some more, it comes back here, and it gives you a trade right here. Now, this is a valid trade. Okay, It's a direction change, but it's a valid trade. So the entry point on that would have been right here at 42.25, and that ran up to 46.25. So you had enough room in there to get your stop to break even. Okay, again, you take your stop to break even, and it failed to continue the trend again. Okay, right here is what it had to go up above, but it didn't. So you get another break-even trade. You get two break-evens in opposite directions in the same market. That's telling you that in the bigger picture, you're in some chop. Okay, so it drops down here, doesn't give you a trade. Moves back up here, doesn't give you a trade. You see the background here is all blue. Background here is all blue. That's a no trade zone. The indicators are telling you just go look at some other market. Don't even pay attention to this one right now. That's what the indicators are telling you right there. Okay, when it finally came out of the no trade zone, right here, erase those drawings, don't go back here. When it finally came out of the no trade zone, it exceeded this high here. It didn't really exceed this high, but it exceeded this high when it came out of the no trade zone right here. It pulled back down, gave you a green arrow right here. Now, this is a valid trade. It didn't go 8 ticks into profit at this point where you would have moved your stop to break even, so you would have held on to it until it moved up here. Okay, and then it pulls back here. Now this one didn't hit the ribbon, so the arrow is not green. It's black because it didn't hit the ribbon, but it came out of the oversold. So you get that one, and that one you would have had enough room to move your stop to break even, and it did not continue the trend. So you get profit from this, you get a break even on that, you get a break even on that, you get a break even on that, you get profit from all of those. Okay, so it's all the risk management. I mean, that's key to everything. I mean, it's not just trading the NQ. If we go back to Boeing, it's all the risk management in Boeing too. So I erase all these drawings. Okay, and over here in this one that we were just talking about for you, the one you actually asked the question about, if you look at that, I told you what your stop would have been for the 25. Your stop would have been 40 ticks down from here. Your stop would have been right here. You would have bumped your stop to break even after you had 20 ticks in profit. Actually, from about 25 tick, probably after 15 ticks in profit. Bump your stop to break even, so you don't have any risk on the trade anymore. But you expect it's going to get up to this, right? Right? You expect it's going to go above that. It hasn't yet, but you wouldn't have any risk on this trade. You could have taken profit and been out of it. And that's from the 25. If you go to the 50, it's the same thing, but on the other side. Okay. That's what we do every day. If you like what you see in here, if you like what you're hearing, go here to mytradingview.com and sign up for the free trial. We do this every day. This I'm going to change to 9:15. We actually started doing it at 9:15 in the morning. Okay. We're probably doing immediate change on all the things. I'll tell Val all the things get emailed out because there was one guy that was on the trial this morning that showed up at 9:30 because that's what it said. Yeah, so it's the same thing again and again. We've been doing this for years and years. You know, the spreadsheet, I don't know if you saw the spreadsheet part of it. This is our daily results. These are our daily results, the spreadsheet. And it goes back over 10 years of daily results from the room in the morning. Okay, this was today, the room today. I was up $235 a contract. Today it took 17 minutes and 4 trades to get to the goal for the day. That were up $1,170 with 9 contracts on. That's it. It's the same thing again and again. Here on the NQ. This is not going to give us an arrow because we're not in the overbought. It's not even going to give us a trade. Right now it's in the overbought, but now the long-term direction is flat, so it's not going to give us a trade here. Long-term direction over here on the crude just turned flat. This I'll change back to the Russell, and you'll see it's probably flat there too. Okay. And if I seem like I talked really fast, sorry. I always feel like when I do these live streams like this, you know, it's a short period of time, and anytime I'm not saying anything, I feel like it's wasted time. So I'll try to show you something every minute we have time. You guys can always go back and watch the recording of these live streams. You can go back and do recent videos, right? I think that's what they're called, or recent streams or something like that. Recent streams. Thank you, Dwayne. So now I'm being quiet. We have 3.5 minutes left. We don't have any trades here right now. Right. This, what it's doing right now on the ES is pretty close to a trade, but I'm just giving a black arrow because it's coming out of the oversold. We're not in a trade zone anymore. We do have some long-term direction here, but after you come out of a no trade zone or after you switch directions like this, I don't like to take the first black arrow because a lot of times when it's going sideways like this, you're going to get mixed up data down here. So I like to give us a decent pullback down to the ribbon, right? And give us a green arrow after you get a direction change. I know that makes me miss a lot of good trades like these right in here. I end up missing a lot of good trades like those. But if I wait for this one, and usually if I wait for this one and the black line right here is in the right color, go to the highest probability trade, that makes it worth the wait. Okay. Again, if you have not taken a free trial with us and you want to, go to mytradingiq.com, sign up for the free trial. All right. I can't type in that link to you, but you can find that link underneath the charts. I think I can show you. Underneath the charts, right here. These are the charts you're looking at. If you scroll down, it's right here underneath the charts. Let's go back to the charts. So I'm going to minimize this because we need a pullback there. We ended up with no trade here. We're going right back into a no trade zone. We're going to have no trade here. We're trading above the ribbon. This is the Russell now on 25 range. I'm going to go back to a 7 range on that. Right. So the Russell actually gave a push up right. This is after a direction change again. So I'm going to wait for it to pull back and bounce off the ribbon. Crude oil's just going sideways here. We're not going to have anything with that. Okay. Yeah, that's what I have. So we're down to about a minute here, and I don't see any more questions coming in, and I don't see any more trades coming in. If you are not already following us and you want to be notified in your little notification thing over here on the side, let's see if I can slide that. It's that easier to see. Little notification thing over here on the side. If you start to follow us, then be notified whenever we do one of these. And we try to do it on a regular basis so you can be ready for it. The only way to get access to these indicators is to take the free trial. If you don't take the trial, you'll never find these indicators anywhere. Okay. It's all part of the process. When you do take the trial, you get 10 hours in the room, and then you get access to one-on-one training too during the trial. Okay. All right. So people are starting to come in right now, and we're just about ready to shut it down. All right. Well, I am going to shut it down. Again, if you haven't taken the free trial, go to mytradingiq.com. mytradingiq.com, one word, and sign up for the trial. It's right there on the home page. All right. Thanks for coming, everybody. We'll do it again tomorrow. Dwayne, you can take it back in fabulous Phoenix, Arizona. Studio A, overlooking South Mountain, America's largest city park. Whenever you are ready. Okay, I almost see it. And there it is. I see it. Okay, I don't have any audio for you though. There it is. All right, 17 minutes, 4 trades, $1,170. Gross.
Good job.
Thank you. Thank you. All right.
All right, guys, we'll pop back 1 minute to the daily chart now. Been talking about this for quite some time. A break of the 24 down to the 38. We expect a bounce. Hasn't been a huge bounce as of yet, but that is also the neckline. Okay, so where we close today is really important. If we close below the 38% fib retracement, which also happens to be the neckline, then it becomes a very high probability that we'll make it to the 50% fib retracement, which will almost always give you a nice bounce. And you got the 62. Then you've got this area here where if the measured move is completed from the top of the head to the neckline, it lines up perfectly this bullish cross that led to this extremely extended up move. First time price revisits that area will almost always be good support. So the fact that we have these two entirely different things, measured move and the previous bullish cross, zeroing in on this one area increases the probability that we will eventually see that price. Again, as I said yesterday and today, don't expect it to happen in a day or even in a week, because you've got major areas where the market should bounce. And the 38 could become a reversal point. The neckline itself could reverse the market, or the 50, or the 62. Embrace all possibilities. Trade what's in front of you. To become a lifetime member, to be in the members only workshop tonight, the eminifuturestrading.com. Click the link, and within 5 minutes, you will be a lifetime member. No recurring fees, no upsells, no nonsense, never. 9 out of 10 new traders fail simply because they don't have anyone to teach them how to do the job. That's why we have a live training room. Interactive, hands-on, 2 hours every trading day. That at least gives you a fighting chance at becoming the 1 out of 10. You might say, well, yeah, but you guys trade futures and I trade stocks. Well, I'm sorry. But the good news is the strategy we teach, the indicators that you will own for life as a passport holder, are fluid across all markets, all time frames. Futures, stocks, crypto, forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. Along with the live training room, you'll have access to unlimited one-on-one private mentoring. Strategy you learn, the indicators you own for life as a passport holder, are fluid across all markets and all time frames. As a passport holder, you'll get the Logic 247 alerts, the Concierge Trade Alert report every evening when it's posted. Again, you'll be in the members only workshop tonight, and if you ever have to miss a workshop live, then we've got that recorded in a private Telegram channel for you. In fact, spend some time watching previous workshops. It's everything a trader needs, all under one roof, one low price. No recurring fees, no upsells, and no nonsense. And that's hard to find. Yesterday we talked about, are you being sifted? Today, let me remind you that God has not forsaken you, even though you might feel that way. In Luke 22:61, Jesus said, you will deny me 3 times. The Bible says, Peter remembered the word of the Lord. Before the rooster crows, you'll deny me 3 times. So Peter went out and wept bitterly. What is it that saves us? Our good works? No. It's our faith in Christ. Ephesians 2:8, for by grace you have been saved through faith, and that not of yourselves, it is the gift of God, not of works, lest anyone should boast. Now you understand the words of Christ to Peter. I have prayed for you that your faith should not fail. Luke 22:32. When you have faith in Christ, you can bounce back. When it comes to God's grace, there is no statute of limitations. Peter denied Jesus, not once, but repeatedly. Maybe that's your story too. This wasn't a moment that Peter would be proud of, but an experience he would grow stronger as a result of. When someone fails badly, we say that they crash and burn. And when something is burned, all that's left is ashes. But we serve a God of restoration who gives beauty for ashes. Isaiah 61:3. If you had seen Peter swearing that he didn't know the Lord, would you have picked him to be your church leader? God did. He made him the head of the New Testament church. Tell people, don't get into messes and don't sin, and that's good advice. God doesn't want us sinning. But we should really say, don't walk head first into sin when you know better. But when you fail, as inevitably you will, turn to God, and He will restore you and use your failure to strengthen you. That's our good word for today. Thanks so much for tuning in. Wherever you are, may God continue richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.